Today I have with me our editorial director from Hart Energy, Lynn Vermillion. We're joined now by Miss Regina Mayor. She's with KPMG. Many of us know her. Thank you so much for being with us, Regina. Really, before we get into talking more specifically about market demand, we want to talk about your thoughts on the outcome of the Railroad Commission, Texas Railroad Commission declining to pro-ration, but there's offering some regulatory relief. What does that say to you?
Well, I was very skeptical that the Railroad Commission would in fact take action. So I felt vindicated that with the ultimate outcome for several reasons why I thought that it wouldn't happen. Number one, the industry wasn't speaking with one voice. So there were definitely pros and cons. Number two, it's very difficult for curtailment in Texas to have a big impact on global oil price. So while it would have helped some of the smaller players in Texas, from the grand scheme economically, it wasn't an action that I thought would have a meaningful impact on the overall macroeconomics. But, it was a very painful process, and I really appreciated that the commission took all the time that they did to hear everyone out and to hear the different perspectives and to have a very thoughtful conversation about it. I think that other things need to happen that would help, right? Royalty relief, tax relief, extensions of leases without drilling activity so that folks don't lose what they have, more access to the federal loan program. Those types of things are going to be more fundamental than one state acting alone will have for the industry.
Regina, what about your feelings about U.S. producers? Will they respond to the demand loss, you think, and make it much difference in the global market? So we were talking about Texas specifically. What about U.S. affecting global market?
There have been very significant announcements and real declines in production, right? So I think we've already seen production come off by almost 900,000 barrels per day, and some very big announcements from the largest players in the Permian with more curtailments expected. I think that is and I think that's part of why the Railroad Commission didn't take the action it needed, because it saw that the market was already really correcting itself. There's anticipation that the U.S. could come down 3 million barrels per day. Canada comes down about 1 million barrels per day. So this sort of OPEC plus, OPEC plus the rest of the world will actually yield the 15 million barrels per day supply reduction that the markets seem to have desired.
And do you think that, OPEC plus and its ability to keep its reduction down, is that going to really be enough to begin with? I guess it's a constant conversation. Some say this will only hold up for a little bit, which is kind of what I think you were alluding to also.
Well, you're right. I mean, in the end, this is a demand event. It's not a supply event. And we cannot cut supply to meet demand where it is today. We can only slow it down so that we hopefully don't run out of storage. So I do believe that the 15 million barrels per day that is being kicked around in the conversations is the floor. That's really what we need. And then it depends on how long it takes for demand to come back up. And you're seeing that, frankly, with price buoyancy for Brent and WTI, right? Brent crossed over $30 per barrel again. WTI is more solidly in the 20s. I think the market is recognizing that the most drastic supply actions have been taken, and then they're getting more optimistic that demand will start to come back.
Regina, speaking of the demand, from a global perspective, it is coming back up, as you said. Do you have any thoughts on what you might see going even further than the next couple months? I mean, I don't know if you all at KPMG have examined that yet.
We have, and sadly, it's a less optimistic picture. So while I said there is buoyancy in crude price markets right now, frankly, I don't believe it's warranted when you look at the data. So we've published a report, KPMG's chief economist, Constance Hunter, and in that report, it talks about Chinese demand movement. And when you look at passenger traffic, air, rail, car, that is still, as of mid-April, down 60% year over year. It was down to below 80% year over year at the height of the pandemic, but it's still down 60%, 3 months on. So if that same pattern repeats itself in Europe and in the US, we don't see demand starting to even trickle back into the system until July, August. Now, we're Americans, and in Texas, I was moving around myself. We have more freedoms. There's open spaces, there's beaches, there's parks. So will Americans see that demand activity? I don't know, but if you just look at China, it's a pretty grim picture.
I've watched a lot of your TV appearances. You've been all over the place, Regina.
I've been busy, yeah.
So we're glad you made time for us here today.
Always.
You've talked a lot about really who are the sufferers in the price crash, and from an investment point of view, obviously we're all sufferers in some way. But who is really getting hit the hardest from this crash in price in WTI?
Well, we definitely are all suffering, right? And in Houston in particular, I am such a fan of the industry that when prices were dropping in the end of February, I bought a bunch of oil company stock. And then who knew it was going to get even worse than that? So I'm still waiting for my positions to recover. And it's pretty dire. But there have been winners and there have been losers. I mean, that crazy anomaly that happened on April 20th and April 21st, where in gross dollars, we had the single worst day next to the single best day, right? We went to negative $40 per barrel on crude in the WTI. Who would have ever thought the market could go negative?
Not me.
No, and the models weren't even structured that way. It was always a theoretical, but not something that would happen. So those providers that could take physical delivery, I think they kind of made out like bandits. And some of those are the bigger players that had storage positions, could move things around. And they're definitely industry players. Hedge funds, speculators, those that try to dip in and out of the futures markets definitely suffered. But we're all suffering from an industry perspective. So I'm not going to say one day made everybody's book, but it was kind of nice to see the good guys win for once.
We're hearing a lot about natural gas now as people turn their attention that way. Any thoughts on, should we see an increase in natural gas prices? Is that a way to go if you're an investor at this point?
Well, those that have strong gas positions are being favored by the market. You can name a couple. While we do see some uplift in gas prices, which for the short term is a positive, it's just not going to be enough to move the needle, and it doesn't really drive growth, right? So if you have good gas producing assets and your price goes from $2.50 to $3, well, that's a margin improvement that your shareholders would enjoy, but it's not allowing you to plow more into the business because it's really not a growth market. I think that's the challenge. The market is betting that more of these curtailments and potentially shut-ins will reduce the volume of gas that's been flooding into the market, and it'll prop up the price a little bit. But when we look at longer term, I mean, gas is still so abundant, and some of those really, really large gas developments that are only glimmers in folks' eyes, I think those get deferred. FIDs get deferred, exploration gets deferred, and the outlook for LNG long-term, near-term and long-term, is pretty grim from a U.S. LNG perspective.
Yeah, and as a shameless plug, I'm actually just did an article for Oil and Gas Investor magazine on all that, on natural gas. So there's my shameless plug for the day.
Well, so what do you think?
a lot of people are saying what you're saying. They are saying associated gas coming off the market is a good signpost, especially for a low cost area, a place like the Marcellus, that you can pull in low cost production and so forth. But they're also, and this is going to lead into my next question, they're also talking, you can't just, it's not for everybody to jump into. You still have to be well capitalized. You still have to have access to money. So exactly. I guess my question for you, whether we're talking oil or natural gas, what's the lender point of view here today as we're standing here? What are the banks thinking about all this?
I don't think the banks like holding these assets, so I don't think they're going to double down. And so access to capital and access to liquidity is scarce, which is why we're going to see potentially some more restructuring, some additional bankruptcies, which is heartbreaking from an industry perspective. But the industry is so inefficient and fragmented that it really does need to bulk up and consolidate and drive scale. So those that have real strong cash positions and their debt is not due for 3 or 4 years as opposed to 1 or 2 years. And you all just did, I think, a Oil and Gas Investor magazine as well, that showed cash on hand, when debt maturities are due. And I thought those were really good pictures to see who might the survivors be versus who might struggle more. And I don't think the banks, there's so much lending that needs to be done because of the global economic crisis and all the other things that are on the brink. And I think there are probably safer sectors to bet in that I just don't see a lot of the banks doubling down in the sector.
Are you hearing anything about international interests as a way of companies trying to get engaged in that to try to survive this on the other side?
You mean international players coming into the U.S. or U.S. players going international?
Yeah, U.S. players going international, or either way, if you've heard any of those interests.
I think it's going to be more, there is the potential that national oil companies that have deep pockets might be interested in some of the U.S. assets. You know, shale is not dead. People keep saying, oh, is this the death of shale? You know, shale might go into hibernation. It might be recessionary for a short time, but the rocks don't go bankrupt. The geology is what it is. And there's still some really good assets to be had. And there will be assets that are under distress. So national oil companies that have good relationships with the administration and feel like they can be bold, that could be where some of the money comes in.
Interesting take there, Regina. We do have a final question to really, you're in Houston like we are. You talk a lot to our colleagues around the area. Can you talk a little bit more about the mood that you're picking up on, or how you're feeling personally? Is it kind of obvious, or do you think there's a silver lining? This industry will survive. I think that is collectively what we all think. But if you can share your thoughts there personally.
Everyone's pretty depressed. I mean, it's such an unprecedented buffeting of all of these factors. And some folks have called it the double black swan, triple black swan. I mean, it's grim. And I think, but everyone's pragmatic and they're realistic. So there's no Pollyanna view. It is definitely, I will survive. I keep hearing Gloria Gaynor in the background. So, because we are resilient, you know, it is about survival. It's definitely not about thriving. It's let's make it through 2020, maybe 2021, and then things will pick back up. But it's how can we use our ingenuity, our entrepreneurial spirit, the things that make us uniquely energy professionals, innovation, digital, reinventing ourselves, to pick up the pieces and continue to have a thriving business, a thriving industry, and a thriving economy. So it's depressing, but there's pragmatism, there's realism, and there's hope for the future.
We really appreciate that, Regina, and we appreciate you taking the time to share with us your expertise.
Thank you for having me, and I always appreciate spending time with all of you, and I think your reporting is terrific, so keep up your great work.
For more Hard Energy videos, follow our social media channels.